Place Capital. It is Thursday, January the 21st, and wanted to just take a couple of minutes just to talk about what we've seen in the markets over the last couple of weeks, discuss what we're seeing in the marketplace, if those current trends are continuing to hold, and then what we're seeing this week and what we see moving forward. And as we welcome in a new administration into power in the United States, kind of what we see as a market update and how that's going to impact the market for investors and impact the market for you. So last week we saw the worst week in the S&P 500 since October 30th, and the market was only down 1.5%. And that just really speaks to the resiliency that this market has been on since about September. It has just continued to move higher and higher and higher and higher. And that's great. But one of the reverse trends that we've seen and we've been talking about is how last year the big cap stocks, which is your S&P 500, really outperformed your small and mid cap stocks. And so the S&P 500 last week was off 1.5%. However, your mid caps and your small cap stocks were actually positive for the week. And year to date, the S&P 500 is really flattish for the year. It is really only up 30 basis points or 0.3%, where the mid cap indexes the mid cap index is up over 5%. And even on top of that, the small cap index year to date is up over 8% year to date. And that's just we're in week 3 of the year. Those are year type returns that we're seeing already in the first 3 weeks of the year. Now, a lot of that is just due to the catch-up trades that we were talking about of the trends last year. And there's just natural catch-up trends between the small and mid cap, as well as these are companies that are really going to benefit from an economic opening and the reopening of the economy. And so investors are betting 6, 9, 12 months in advance that these companies are going to thrive once we come out of COVID. So, and the other thing that we want to talk about too is looking at, we have a new administration in place, and how are those policies going to impact investors, and what does that mean for you? Well, it just means that we have to look at the initiatives and the goals of the current administration. So one of the things that we're looking at and continuing to look at is looking at the more cyclical oriented names. And we've been talking a long time in the last couple of weeks and over the past couple of months about the shift from growth stocks to value stocks. Now, we're still going to continue to see some of those growth stocks continue to do well, but some of these cyclical names that are tied to infrastructure spending, we really believe are going to do well under this current administration, as we believe there's going to be an uptick in infrastructure spending. So we believe those to do well. And we've really seen value really start to catch up and really lead the market higher. However, this week, what we're seeing is a little bit of a catch up from growth to value. And as of last Friday, growth was actually negative 2% for the year, and value was positive over 2% for the year. And so now you're starting to see a little bit of catch up from growth to value this week in the marketplace. But the analogy that I like to give as we see markets continuing to march higher is kind of think of it as a seesaw. You've got value going up one day and then growth coming back. Then you got value going up, then you have growth catching up. But the market is moving up together and in sync and higher. But it's kind of doing a balancing act as it's moving upwards. So as well as always, if you have any questions about what's going on in the stock market, what's going on in your life or how it's impacting you, please feel free to reach out to us, give us a call. We're easy to talk to. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your day and a wonderful weekend. Thank you so much.